And so this is based on questions that have been coming in the past few days. And so this day, we're going to look at matters to do with car loans. So if you're in the business space, you need to get a car, but you can't, raise the funds to buy it completely, and you have to maybe look at an option of getting a car loan. What options are there, and what are the pros and cons of these particular options? So we'll be getting with that conversation, and in studios, I'm joined by our pretty much Mr. Ian Mutibwa. He is a tax and financial expert right here in the country. Welcome to the show again.
Thank you very much, and good morning, viewers.
Good morning. So when it comes to getting cars and acquiring cars, most people find themselves in that space where they have to, get a car loan, and the options are many. So others go to the financial institutions. Others say that if this car bond can actually give me a car loan, why not? So help us to understand what other options are there, and maybe the pros and cons of this, so my people can make informed decisions when it comes to getting loans.
Thank you very much, Mala. This issue of car loans, I would broadly categorize it into asset financing. Now, asset financing is where you have an asset you want to purchase, but don't have the finances.
Correct.
So you go to the right people with the right money to give you that money so that you can purchase that asset. A car is one of the assets. So we're looking at maybe cars for personal use, cars for business use. You want a fleet of cars? Do you want just a specialized vehicle, tractors and things like that? So there are various options that are available to various people. If you're an individual, if you're a company, if you're a business entity, what is available to you?
Let's look at a business entity.
Okay, so let's look at the business entity. Now, there are two ways you can finance your entity. One of them is called a finance lease, and the other one is an operating lease. Now, what's the difference between the finance lease and operating lease? A finance lease is where you acquire an asset and you pay periodically, then you own that asset after you complete the payment. An operating lease, on the other hand, is that you rent the asset. So it's not yours, it will never be yours, but you keep paying and using it like as if it's yours. So those are two ways you can actually have an asset work for you, but without money, you actually acquire that particular asset. So depending on what appetite you have for the business, you can say, let me get an operating lease. I don't have the money to pay 150 million, but I can pay 3 million every month for the next 6 months, have this truck work for me for 6 months, and then return it to the owner. Or I can say I want to own the asset, but I don't have 150 million, so I pay periodically 4 or 5 million, and then I can get the asset owned by myself.
All right. So looking at a vehicle as a liability, it is a liability. We always say that it's like a baby, it just takes off. So for business purposes, of the two options between getting an operational lease or a financial lease, as a financial expert, what would you advise a business person?
Again, it goes to the risk appetite of the business, and also the needs of the business. You'll find that one of the businesses will want to have, say, a vehicle for 8 months. They don't need to purchase one. I know of people who have gotten contracts, big contracts, and they had a lot of expenses hiring out cars. So it will be cheaper to actually buy one. So you look at your balance sheet and say, do I want these assets on my balance sheet? And if I don't want them, how can I use the asset without actually acquiring it? So it depends on the risk appetite of the business. Most companies will opt for finance leases because ultimately you own the asset. But remember, as you said, cars are depreciable assets. They depreciate over time. So if I buy a car, or I get a car of 150 million now, after 6 months probably to be depreciated by 25% or 30%, whatever percentage it has to be depreciated accounting-wise or tax-wise. And then that becomes a new value. So by the time you finish paying off the loan, you could find that the asset that was 150 million is now probably 100 million, and you've really lost. So if you try and sell that asset again, you'll have an issue. So depending on your risk appetite, you can say, let me go for an operating lease. It will be much easier for me, soft on the business, and I won't have that depreciated asset on my balance sheet.
Okay, all right. So let's look at the sources now.
Yes.
Where should I go if I need, for example, if I've done my risk assessment and what maybe would work for me is a finance asset? Where should I go?
There are various options. There are banks now, there are money lending institutions, there are microfinance institutions, there are car bonds, there are also individual money lenders. So again, it goes back to what I feel as an individual, what is faster for me, and there are pros and cons for each and every one of them.
Can you start with the car bond?
Okay, so with the car bond, you find that the car bonds will give you a car, and let's say it's 20 million. but you're going to pay 2 million every single month with an interest. If you don't pay it within 6 months, you pay an interest of another 5 million or 6 million. Or it will work automatically like a money lender. Only that for them, when it comes to enforcement, they don't have a regulator to actually enforce how they collect.
Okay.
So they can really use all sorts of ruthless methods of collecting that particular money that has to be paid to them. If you flip it side, the money lenders used to do the same exact thing. They had no regulator, but now they have a regulator. So you find that with regulation, the customer is more or less protected. So you can go to a money lender, but there's an authority now that governs money lenders, where you can probably make a complaint if interest rates are too high, if there's that particular option.
Right.
So for the car bond, as opposed to a money lender, there's no one regulating them. They're really saying it's my car, my terms, my interest, my rules.
The interest now?
Yes.
Do they have lower interest rates? Why do people gravitate towards getting car bond loans?
It goes down to the ease of getting the loan. If I go to a money lender, you probably ask for collateral. If I go to a car bond, on the other hand, he may not ask for collateral. If I go to a bank, they may charge me the 21%, which can skyrocket to 30% interest. So people would choose probably a money lender or a car bond because it's easy. It's a faster way of getting the income. It's a faster way of getting the car. You can get it as quick as today. You go there in the morning at 8:30, by 8:45 you have the car.
And it's collateral free?
It's not exactly collateral free, but because the car will be more or less a collateral, but you have so many other paperwork to sign, and you find that the collateral does not only include the car, but probably personal checks, personal guarantees.
Right.
And if you don't pay, they can come after you, come after your salary, come after so many other things.
So what you're saying is that the pro here with the car bond loans is that maybe the interest rate could be
negotiated.
manageable.
Yeah, you can negotiate it.
Yeah, you can negotiate it.
And it's faster to get.
And it's faster to get.
Yes.
And also the whole, hullabaloo of getting too many documents for collateral, that has been waived off.
Yes.
But the con is that they can harass you.
They will harass you.
They will harass you, not they can harass you.
Again, if you choose, say, a financial institution, on the other hand, there's so much paperwork, sign here, sign there, national ID, passport, and guarantees and everything. It will take you probably between 24 hours and a week to get the loan. So depending on how fast you want the car, what use you want the car for, you can choose where to go. And there are quite a number of vehicles that you can use to actually finance a car loan. For example, you can have a salary loan.
Right.
You can, if you're a salaried employee and you want to have a certain vehicle, you can say, on my salary, take off this amount of money every month so they can service my car. Again, the salary insurance, where you can buffer you from, in case you lose your job, they give you a particular period where you don't have to pay the insurance. So there's that particular option. You can also go directly to the bank and say, look, I have a car I've identified, I want 20 million shillings, lend me.
Right.
So the bank will say, okay, what security do you have, so that you can give you the money and you go directly and buy the car. So that's another option. If you're a business person and you want to, say, buy a fleet of cars, you can use letters of credit, where you say, I don't have the money now, but the bank can actually guarantee that as soon as you give me the vehicles, they will make a payment.
Okay, let's touch on creditworthiness of borrowers.
Yes.
We never understand this, and at times we brush such things off. That why is this critical? And help the people to understand this spec that is quite critical when it comes to accessing loans.
Now, creditworthiness means can I take money and pay it back in a time that I should be paying it back? What the government has done, or what the financial regulator has done, is create a credit reference bureau. So when you're getting a loan from a financial institution, including money lenders, you have to have a credit score. What that credit reference bureau does, it tracks what loans you have, how well you service your loans. Are you in default? Do you have issues of being chased around to pay the money?
Right.
That's what the credit reference bureau would actually do. Unfortunately, you find that money lenders or car bonds may not necessarily go to the credit reference bureaus to actually get these particular references. But it's important, because if I'm to the neck drowned in loans and you give me another loan, trust me, you will not be paid.
Correct.
So you need to know this person I'm lending, what their source of income, how convenient can they pay me back? Do I have to chase them around? Do I have to put a tag on their bank account? Is the person good at paying back their money? And I can assure you, many people don't want to pay back money. when you give it to them with one hand and they give it back to you in 7 hands because they don't want to give it back to you. So how creditworthy is a person is important when you're lending them. Sometimes you get cars for personal use.
Right.
But do we really need them?
Right.
Do we have the money to pay for them? Okay. I'm having a salary of 1 million and telling me take half of it to pay for a car, yet I have 3 children going to school, I have a house to pay for rent. I'm not actually credit worthy. I cannot pay that amount of money.
So that's critical for them that are in that space to just protect themselves and cushion themselves.
Yes.
Right. Thank you so much. In a nutshell, as we come to a close, what should people keep in mind, like top of mind, especially them that are in the business space and maybe they've been thinking of, accessing a car loan to, of course, grow their businesses, so to speak. Speak to them to this morning. Camera one.
Yeah, okay. So the issue is, do you need the car? What do you need it for? What are your sources of revenue? Can you cover that particular loan? And if you can cover a particular loan, what is the shortest time frame you can actually cover it? If you cannot cover it in that time frame, can you negotiate for a longer time frame and then you find a way of paying off with less interest?
Okay. So negotiation.
Negotiation.
Push for that.
Yes.
All right. Thank you so much, Ian Mutibwa, financial and tax expert right here in the country. Thank you so much.
Thank you very much.
We've learned quite a bit. All right. So don't make the common mistakes that people make. All right. So at this point in time, we do have David Rukasi. He is at the Pearl of Africa Hotel with the key conversation that we'll be taking center stage here on NTV this morning. David.
Thank you for joining us. Yes, you're right. We are at the Pearl of Africa Hotel. This is the ballroom where we are. And today the event happening here is the post-budget dialogue, analyzing the 2019-20 budget from the gender perspective. And the theme is leaving no one behind. And with me at Pearl of Africa Hotel Ballroom is Elizabeth Ampere, who is the Program Manager, Women and Leadership. Good morning. Thank you for joining us.
Thank you. Good morning, David. Good morning, dear viewers. As introduced, my name is Elizabeth Ampere, and we are right here at the ballroom at Pearl of Africa Hotel, where we are holding a multi-stakeholder dialogue that intends to interrogate the 2019-2020 budget of this country, to see how inclusive it is, but also to see and ensure that it leaves no one behind, that the priorities of men, women, girls and boys of this country have been actually featured in that budget, and that this budget actually benefits each and everyone in this country in the regard that we leave no one behind.